from adjusted trial balance, we make financial statements. And now what do we mean by closing the books or close the books? So which accounts are going to be closed? Remember, all the income statements accounts must be closed. Why? Because income statement definition is income statement shows the income or revenue minus expense during the year, right? So we have to close, for example, this is income for 2014. So this will show what happened to the 2014, how much we have earned. So we do not carry forward its balance to 2015. All right. So we must close these books so that next year in 2015 we freshly start our sales again. So this makes sense, right? And also it's a matching principle because 2014 sales belongs to 2014 and 2015 sales belong to 2015. Not a single portion will transfer to 2015 of the sales, and also for the expenses as well. So for 2014, we must close down the balance. So remember, in our sales or revenue account, there is a credit balance here. For example, 13,500. This is the balance. And we must close. Closing the books means we must debit it with some account of 13,000 of equivalent amount so that it is balanced and we close this 2014 year. That's it. Okay. So which accounts need to be closed? All the income statements, revenue, expenses, and one more, which is dividend. And that is retained earnings account. Retained earnings statement account. If you make retained earning, what is the formula for retained earning? Retained earning at the beginning plus income statement, net income minus dividend. Okay. So which account we will be closing that one? Retained earnings. Expenses will be closed with the retained earnings. Dividend will be closed with the retained earnings. So what is the idea here? So you see, the revenue has credit balance here. For example, 30,500. The expense normal balance is debit balance. Dividend also has debit balance, for example, 2,000. So it means we need to write on the debit side of the revenue retained earning equal to the same amount. On expense, we need to write on the credit side. Why everything is passed? Guys, can you hear me?
Yes.
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 Got it. Okay, just wait a second. Take some time. Okay, we just fixed our problem here. So let me just show you what we were discussing. We were discussing that the revenue normal balance, so the credit balance, and then expenses. We talk about, for example, it is debit balance. Normal balance is 1,500, and we have dividend. The normal balance is debit balance, it is 2,000. So all we need to do, we need to adjust. If we want to close it down, which means there is no balance here, there is no balance here, there is no balance here, then we need to make the reverse entry, a reverse account here, so that the balance is zero. So on debit side of the revenue, we write it down 1,300, 400, but we charge which account? Retained earning account. On expense, on the credit side, we write down retained earning 1,500. Dividend 2,000 as a retained earning. So it means entry gonna be that Retained earning is going to be debited for revenue and revenue is going to be credited. And what is the closing entry for expenses? The expenses, so expenses are credited by retained earning. So retained earning to expense, and here retained earning to revenue, and here retained earning to dividend. So that's why we have, let me show you the slide here. So we need to close the revenue as debit revenue account because the natural balance is credit. So we have to make it debit so that our account balance is zero, and credit retained earning. Expense, debit retained earning, credit expense account. Debit retained earning and credit the dividends account. So here we go. So which accounts need to be closed on our adjusted trial balance? All the dividend and income statement accounts. The balance sheet accounts won't be closed. Okay, so let's close these. So you see all the rent expenses here. This dividend, and so this is sales and dividend. This is dividend. All three must be closed against retained earnings. So what is the entry? Service revenue to retained earning. Retained earning to all expenses. And at the end, retained earning to dividend. So when we close it down, so retained earning beginning balance is 1800, 800. Revenue is coming from here at the credit side, and debit side all the expenses. See, all the expenses are 4600. 4600 is here, and the last one is dividend. So ending balance will remain the same, 18,500. So if you go back to our retained earnings statement, the ending balance is same as what we have constructed in our balance sheet. So in balance sheet, here we go. 1800, 5,000, 1800, 5,000. So it means our books of income statement are closed. Any question, guys? Understand? Oliver?
Yes.
Didi? Mirko? Miria? Faik?
Yes, sir.
Marco? Priscilla?
Yeah, clear.
and Venetia? Noon? Subhan? All right?
Yes.
Yes.
Okay. So now if you post the entry on their individual accounts, everything is closed. 1800, 1800. So we have a double line, which means no balance is going to be carried forward to the next year, which means these books are closed for 2014, closed. And at the end, you have the retained earning balance, which is exactly equal to what you have put it on balance sheet and retained earning statement. All right. So if you understand all this stuff, so we don't have much battery left, so otherwise it's going to be a breakout room activity. So let's just do it together. Okay. So we have to prepare the closing entry for the Westmount Service Corporation. And remember, our year is ending on 31st of December 2014. So remember, closing entries are done for revenue, expenses, and dividend. So find out. So cost of goods sold is our expense. It means it must be closed. Accumulated depreciation is balance sheet item. It is not going to be closed. Selling, journal, and administrative expense belong to expenses. We must close it. Retained earning. This is extra information. Service revenue must be closed. Yes. Depreciation expense closed. Yes. Interest revenue must be closed. Yes. Dividend must be closed. Yes. Income tax expense must be closed. Yes. Payable is a balance sheet item. No. So what is the entry for revenue closure? revenue journal or normal expense is credit, right? So we make it debit. So revenue to retain earnings. So which kind of revenue we have? We have two revenues, service revenue and interest revenue. So it's gonna be service revenue, interest revenue to retain earning. This comes from addition of these two. Guys, you understand? PD, Miria, Momo, Mirko, Noon, Thara and Mina. So,
I understand, sir.
okay. So every kind of revenue must be closed. So expense, if you want to close it, what is the entry? Expense normal balance is debit. So you make expense credit. Means entry gonna be retain earning debit and expense credit. So retain earning to all the expenses. See, cost of goods sold, admin journal, and administrative expenses, selling expenses, and then depreciation expense, income tax expense, right? Done. So this amount is coming from all the addition of these four numbers. And the last one is dividend. How we close the dividend? Dividend normal balance is debit. So we may have to make dividend credit. So answer going to be retain earning to dividend 600. All right. So now can you calculate the net income from here? Yes. All the revenue minus all the expense. So total revenue going to be, so we calculated from here, total revenue is, if you see here, total revenue is going to be 64,600 and all the expense going to be 5088. So you see net income is going to be 13,800. Or you can just say that these are two revenues and these are four expenses. You add it, all the revenue on, add all the expenses and just less it. This is the net income. All right, this is the formula. And now preparing the retained earning T account. So look at the entries here. Close of revenue accounts here. What is the entry here? Retained earning is being credited with 64,600. So retained earning account must be credited with